Sunday, March 13th, 2022, Monaco 64, home of alternative economics and contrarian views. So before I start today, I like to say that this video will be published on Monday morning London time. And I'm doing it on Sunday because tomorrow I'm leaving to Switzerland very early. So I pre-recorded the video. I've been out for Sunday lunch with my wife. That's why I'm wearing a tie. I usually don't wear a tie, but I just felt like wearing one because I've got a lot of ties I haven't worn in a long time. So I thought, why not? Anyway, we're not going to look at the markets today because it's Sunday and the markets aren't open yet. But what we're going to look at today is the reset. And by reset, I don't mean the Great Reset, Klaus Schwab's Great Reset that he wishes he could implement. But I'm going to look at the a natural reset of assets, a reset of the financial or paper bubble that we've had really since 1971. And the scales are rebalancing, so to speak. And I think we are entering the period, the final leg of the rebalancing. And one thing I'd have to say, though, is that things in life and markets always seem to take a lot longer than you think they should take. So I'm going to hold judgment to when this is going to complete. But one thing I'm going to say, I think it will be complete when the Dow to gold ratio is at 1-to-1, maybe even lower. So with that, I'm going to do something that I did a few weeks ago and look at how the major asset classes from stock markets to commodities are doing year to date and how they're pointing to this rebalancing. So I've looked at the major stock market indices around the world. I've looked at bond market ETFs, and I've looked at commodities, miners, and the dollar index as well. And then we're going to look at the Dow to gold ratio, some historical charts, and then the gold to silver ratio, which I think is very important as well. What about geopolitics? What's happening in the world? And everything else, socially, economically, politically. Well, I think those are just symptoms of the whole system that we've had since 1971. As John Exter called it, it's a I owe you nothing dollar after August 15th, 1971. And yes, the United States did default back in 71. Because they promised payment in gold, 1 troy ounce for every $35, and they reneged on that temporarily, but they still haven't really fulfilled that promise. And that's why, for example, right now there's talk that the Russians could pay off their dollar debts with ruble, and that's a default, but that's what the Americans did as well. Many people think the Americans have never defaulted, but they did. Anyway, let's look then at the major stock market indices around the world. And I did this year to date as of March 11th, or Friday, 2022, of course. So as you can see, the Dow is down almost 10%, 9.43%. S&P 500 down 11.79%. NASDAQ down almost 18%, as you can see, 17.9%. The Toronto index is actually up on the year, 1.13%. I guess the wealth of Canada in terms of minerals is helping the TSX. And you've got the Brazilian stock market index, and I put it in yellow because it's the best performing one, the Bovespa. That's up 6.75%. And it's not surprising because Brazil is very wealthy in natural resources. I guess the only problem with Brazil is the political aspect of Brazil, the management of the country. If they can get that right, Brazil could be a good place to be in the future, and it's pointing to that as well. FTSE 100 index is down 3.1%. Granted that the currency is not doing very well, but anyway, it's outperforming most of the stock market indices here. The UK, I think, has a lot of miners and commodity companies listed in the FTSE 100 index. We've got the Euro Stoxx 50, which is a basket of the major companies in the Eurozone, and the DAX, which is the major German stock market index. They're down about the same, 14.23 and 14.21 respectively. They're underperforming the Dow and the S&P, and I would say it's because Germany has a lot to lose by what's happening geopolitically. The Moscow exchange index here, considering what the West has done in terms of sanctions and all the other measures they've taken in terms of like SWIFT, this index is actually not doing that badly. It's down 34.77%. I think over the long term, Russia will do well because Russia is probably the wealthiest and biggest country in terms of area natural resources. And I think they have very little debt as well. The Australian ASX 200, you'd think it would be doing better because of the natural resources. And it is kind of than the major indices here, but it's still down 5.12%. And the China A50 is down 11.79%. So now let's move to the bond markets. And this is very telling because usually when the stock markets are not doing well, bond markets do well. Bond prices go up and yields go down. But we haven't had this year. We've had the bond market go down as well in prices and yields go up. And that's very unusual, especially in the last 20 years or so. So we've looked at bond market performance year to date as of March 11th. So I've got here the TLT, or a 20-year plus T-bond ETF. That's down 9.39%. That's a significant move lower. We've got HYG, which is the high yield corporate bond ETF, which is strange because high yield usually is a riskier kind of bond, but it's outperformed the T-bond ETF, which is supposed to be risk-free, right? Treasuries. Strange. So that's down 6.94%. We got the Vanguard Intermediate Corporate Bond ETF. That's down just over 6%. And we got the broad, iShares Broad Investment Grade ETF. And it's strange as well that that's underperforming the high yield corporate bonds. Usually it should be the other way around. The investment grade should be doing better. Anyway, and I've got here VGOV, UK Gilt ETF. That's the UK government bond. Well, that's not doing well either. It's down 6.15% year to date. Billy's getting up. We've got the commodity sector year-to-date performances as of March 11th. So I've got here the CMOD Invesco Commodity ETF. So that's up 23.33% year-to-date. And am I saying these are going to continue to go up like they have so far? No, there will be corrections along the way, but I think we're in for several years of outperformance by the commodity sector against the bond and stock sector, the financial assets. It's the rebalancing. GLD, I've used that as a proxy for gold. And believe me, I don't like GLD, but it makes it easier to look at, to give you an idea. So gold up just about 10% year to date. Silver has caught up. it's up 12.7, and again, it's the SLV, and I realize it's ETF, it's a banker's instrument, and as I've said many times, the only way, or the best way, in my opinion, to own gold and silver is to own the real thing. GDX, gold miner, bigger miners ETF, that's doing very well, up almost as much as the commodity ETF. It's up 22.53%. The GDXJ, surprisingly underperforming. Usually it does better, but I think eventually it will outperform the GDX. That's up 16.11%. And the silver miners, the junior miners, silver ETF, that's up 18.43%. And the dollar index, I know it's not a commodity, but I thought I'd put it on this page. It's up just over 3% year to date. It just goes to show that gold and the dollar really, when things start really going crazy versus fiat currencies, the dollar included, the dollar might still go up, but gold will go up even more. So actually gold is performing even better versus the major currencies than it is against the dollar. So now we're just going to look at a couple of charts. The first two charts are of the Dow to gold ratio, or how many troy ounces of gold you need to buy one Dow. And I think it's good to look at charts because it gives you an idea of where we are and where we're probably going to go. So I've got on the left-hand side here the longer term chart. You can see that the Dow topped in 1999. You needed over 42 ounces of gold to get one Dow. And historically, back in the 30s and also in 1980, that ratio went down to almost 1. And I think this time around, when this credit cycle completes, and I think it's been unwinding since 1999, 2000. Believe it or not. And yes, we've had a counter trend rally since 2011, i.e. Stocks and paper assets have outperformed gold. But I think we're starting to turn now, and eventually we will reach 1-to-1. I don't know where the price of gold or the Dow will be, but it's all about relative value, I would say. And I've got a shorter term chart here. It's a 5-year chart of the Dow to gold ratio, and you can see here how we failed to go back up above 22 in the last couple of years, and it's now like starting to fall. Gold is starting to outperform stocks. Yeah, we could continue lower. We could see some support in terms of stocks versus gold if we get towards the 14, 13.5 area. And as I said earlier, sometimes things in life and markets take a lot longer to occur than we think they should. But I would say we're talking maybe not more than 5 years. I would expect this ratio to be very close to 1-to-1. It could be before, but I don't have a crystal ball. I can just see that where the trend is going and the rebalancing is going. And I think it fits in well with what's happening geopolitically, with the power of the US dollar and the fact that many countries are trying to find alternatives to the US dollar. So we're going to finish off with the gold to silver ratio, or how many troy ounces of silver you need to buy 1 troy ounce of gold. And I've got a long-term chart here going back a few decades, and you can see that the 80 level is quite an important level. Yes, back in 2019, 2020, that ratio went up to almost 130. Silver was highly undervalued versus gold, and we have corrected, of course. Silver has outperformed since then, but of late it's been trying to retest that 80 level, and it looks like it's turning as well. And why am I looking at the gold to silver ratio? Well, because in a precious metals bull market, in a commodity bull market, silver usually outperforms, and I think it still will outperform. Where could that ratio go? Or this ratio go, sorry. Well, back in 2011, we got down to around 30. Historically, of course, under bimetallic monetary systems or monetary arrangements, that ratio has been around 15 or 16 to 1. It's possible we could go to those levels. So I'm sure some of you or a lot of you are going to ask, you know, where will the price of silver be? Well, it's, as I said, it's all relative terms. You need to try to figure it out yourself. If we're going to have a 1-to-1 Dow to gold ratio, try to imagine where we could be, and then from that level, extrapolate 15-to-1 gold to silver ratio. So there you go. Yes, I think the rebalancing is starting in earnest. I have been forecasting this for many years, and it looks like it's accelerating now. So I will be in Switzerland till Monday next week. So I will be making videos from Switzerland. Hopefully you'll enjoy them as well. And unfortunately, Billy is going to stay here in England. He's not coming, but he'll be back next week. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great week. Take care. Bye.